You've tried investing your whole life. You feel like every stock you buy just goes down. In fact, you probably think that you're cursed and that if you buy something, it's guaranteed to go down. And you're watching other people's portfolios going up and up and up, and you're sitting there scratching your head. What the heck am I doing wrong? I'm going to show you the number one secret to making better stock market returns and how to effectively uncurse yourself. And it's all about value investing, the same principles that Warren Buffett, Ben Graham, and Charlie Munger have all taught us. And the best part about what I'm going to show you is that you can apply this same framework to every single company that you evaluate. What you're looking at is a chart of Dick's Sporting Goods. Now, this is not an endorsement or a recommendation of the stock. I'm just using Dick's Sporting Goods as an illustrative example for educational purposes. The black line that you're looking at is the company's stock price from 2009 to 2026. Now, most investors, as in 95 to 99% of investors, look at the stock price. They just look at the black line and they make all of their buy and sell decisions based on the black line. They see the black line going up, which is the stock price. They think, oh, shoot, I got to go buy it. I'm getting FOMO. It's going up. I got to get in, this and that. And then what happens? Well, then the stock price crashes and then they think, oh my God, the sky's falling. I don't know what I was thinking. I got to get out before it goes to zero. And then they sell when it goes down. This is how people invest. This is the reality. And I see this all the time. I own a wealth management firm. I make stock portfolios for clients every single day. When I onboard them, I see what their portfolios look like. I talk to them, and I just talk to investors a lot in general. And if you want to make better investment decisions, you have to stop looking at the black line in isolation. You need to look at the price relative to the value of the company. That is the secret to making very good stock market returns. Now, nothing's guaranteed in investing. We don't know the future. But what you're trying to do is you're trying to take as much risk off of the table as you can when you're making investments. And you do that very simply by buying companies for less than what they're worth. If I was just to take my cursor and point to a different part in time, for example, if I go right here to 2016 and I ask you, hey, is this stock undervalued or is it overvalued? You would have no way of answering because the only thing I've given you, the only information I've presented is the stock price. And that doesn't tell you if something is overvalued or if it's undervalued. We have to look at the earnings in relation to the stock price. So I'm going to go ahead and do that. I'm going to put the earnings back on the chart. And you can see here earnings, EPS, earnings per share. You can see in 2010 it was $1.20. And it keeps going up all the way to 2025. It was over $14 a share. That's the profit. That's how much money the company is making. And so now when we look at the stock price, what do we see? Well, first of all, we notice that the stock price tracks the earnings almost flawlessly, but there are always periods of overvaluation where the stock price is above what the company is worth, and undervaluation where the stock price is trading at less than what the company is worth. As investors, our job is to buy great companies for less than what they're worth. And what most investors are doing is they're buying stocks when they're overvalued. And when you do that, in 2015, for example, if you buy a stock when it's overvalued and you hold on to it, well, what's going to happen? You're going to lose money because you overpaid for that investment. But if you buy a stock when it's undervalued and you hold it until it's fairly valued, well, you have a chance to make very good returns. And that's the secret. That is how you make great stock market returns. You buy companies for less than what they're worth. You don't buy companies for more than what they're worth. And this is something that I talk to clients all the time at my investment firm. When people bring me their portfolios and I have to go in and clean things up, I'll walk them through their holdings and I'll show them, hey, look, you've got 10 stocks in this account. All 10 were bought at a higher price than what they're worth. It's no surprise your portfolio is gone down for 20% for 5 straight years. So we have to go in and clean up your portfolio, buy really good, high quality companies that are selling for less than what they're worth, right? Selling, you can buy it for less than what it's worth. And that is how you make the best stock market returns. If you're interested in having your portfolio looked at and actively managed, just shoot me an email, Raul@DocShahFinancial.com. I'd love to hear from you and your personal situation and how I could help. I deal with this every single day with clients. And lastly, like the video, leave a comment, and subscribe for more. See you next time.